Ladies and gentlemen, good day and welcome to Transrail Lightning Limited Q2 and H1 FY26 earnings conference call. As a reminder, all participants' lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anuj. Thank you, and over to you.
Thank you. Good afternoon, everyone. On behalf of Phillip Capital Private Client Group, I welcome you all to the Q2 and H1 FY26 earnings conference call of Transrail Lighting Limited. Today, from the management, we have Mr. Randeep Narang, who is the MD and CEO of the company, Mr. Deepak Khandelwal, who is the Chief Financial Officer of the company. I would now like to hand over the call to Mr. Randeep Narang for his opening remarks, and then we'll open the floor for the question and answer session. Over to you, sir.
Good afternoon, everybody. Welcome to this earnings call. It's a privilege to have all of you here to look at a second quarter and half-yearly result. The first half of the year marked a period of robust growth backed by continued traction in the T&D segment and timely execution across most of our ongoing projects. Our revenue grew year-on-year by 61%, EBITDA grew by 49%, and PBT grew by 66%. While our PAT showed an impressive growth of 84% in the same period. We have delivered results in line with our expectations, supported to robust performance across the domestic and international projects. Our EBITDA margins for H1 stood at 11.93%, and our PBT margins increased to 8.4%, and our PAT margins increased by 74 basis points to 5.8%, highlighting our strong operational performance and disciplined execution. Our capacity expansion program for the factories, the brownfield expansion of tower manufacturing units, is nearing completion. The greenfield project facility remains on track to be commissioned by end of the year. The conductor plant will get into expansion mode by Q1 of next year. And what we see is the phase 2 expansions also on brownfield projects are underway. Our order front, we secured new orders worth 1992 crores during the quarter, that is the second quarter, including entry into 3 new countries. With this, the order inflow crossed 3,740 crores for H1. In addition to this, we have a L1 position of approximately 2,682 crores, led mainly by T&D. We also have encouraging smaller orders in civil and poles. Our unexecuted order book stands at 17,799 crores, which also includes the L1 as I just mentioned, 2682, providing good visibility for the coming quarters. The mix remains well balanced between domestic and international. Our total order book, which is in hand today, is 15,116 crores, 93% of which is T&D segment. The domestic order book accounts for 61%, where the international accounts for 39%. In the first half, we commissioned several key projects reflecting our strong execution capabilities across geographies. In India, this includes 765 kV lines for Adani at Khavda, Khetri-Narela project, and 765 kV DC Banaskantha Ahmedabad for Power Grid. We have commissioned 3 400 kV transmission lines in Sholapur for Renew Power and completed cooling tower works at Yadadri, Telangana, and Udangadi, Tamil Nadu. On international front, the Bangladesh, we have successfully commissioned 400 kV Rupur Gopalganj river crossing project as well as 230 kV Rupur Dharmai line. Additionally, we have commissioned 132 kV transmission substations in Africa, in Eswatini, Nicaragua, Latin America, and further strengthening our execution credentials in overseas markets. We are also proud to be recognized as the most admired emerging EPC company in power sector by ET Now in the Infra Focus Awards in September. Our Deoli Tower Plant also earned an A-grade certification from Power Grid, and we received multiple safety and quality awards, including Maharashtra Safety Award 2023 and recognition of the Corporate Philanthropist of the Year for our CSR initiatives. Overall, the outlook of T&D remains bullish, both in India and overseas. We will continue to pursue planned bidding, margin assertive growth, and disciplined execution as we move forward into the second half of the year. With this, I request our CFO, Mr. Deepak Khandelwal, to take us through the financial performance.
Thank you, sir, and good afternoon to everyone. For Q2 FY26, revenue from operations stood at Rs 1,561 crores, a year-on-year growth of 43%. EBITDA was 186 crore with a margin of 11.93%, growth of 34% compared to last year. Profit after tax stood at 90.98 crore, up 65% year-on-year. For the first half of financial year 26, revenue was 3,221 crore, a growth of 61%, and EBITDA was rupees 386 crore, which is a growth of 49% year-on-year EBITDA margin. Year-on-year EBITDA margin stood at 11.98%. PAT for H1 grew by 84% year-on-year to rupees 197 crores. Performance was driven by steady execution and improved operating discipline. Net debt as of September 30 was rupees 703 crore with a debt equity ratio of 0.38 times. Working capital stood at 84 days and 77 days ex IPO funds, supported by timely collection and monitoring. Our liquidity position remains adequate to meet current and near-term requirements. In summary, Q1 and H1 financial year 26 reflect steady operational performance and financial discipline. We remain focused on maintaining execution efficiency, cost control, and balance sheet stability as we progress through the year.
Okay, we can now go into the next phase of this call. Hand it back.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Palash Jain from ICICI Securities. Please go ahead.
Hello. Yeah. Congratulations, sir, for a good set of numbers. So my first question is actually a bookkeeping question. What has been the capex for H1, and further, what is the guidance for the capex as well as the order inflow for the full year FY26?
So, against the approved sanction of a capex of 325 crores in phase 1, 88% of the orders have been placed and around 60% has been utilized. The order book guidance, if you see, we are at 3740 for H1 with 2,600 odd crores of L1. So we will be in the range of 9 to 10,000 crores of fresh order book for this year.
9 to 10,000 crores of fresh orders. Okay. Secondly, just a clarification, sir. We can see a significant increase in debt. So has it been taken for funding the working capital requirements or for some other purpose?
Yeah, partly it is taken for the working capital requirement, partly for the term loan for capex purposes.
Okay, thank you. That helps.
Okay.
A reminder to all the participants, please restrict yourselves to 2 questions. The next question comes from the line of Bala Murli Krishna from Oman Investment Advisors. Please go ahead.
Hi, good evening. So, as far as the execution is concerned, from the brownfield and greenfield capex going to stream in the coming quarters. So, is it anything related to the capitalization, the execution phases which you want when the
Mr. Bala, sorry to interrupt. Mr. Bala, sorry to interrupt. You need to check your audio. You need to increase a little bit.
We can't hear you clearly, please.
Yeah.
Can you speak louder?
Yeah. Yeah. Is it okay now?
Loud and clear to me.
Hello.
Yeah, better.
Yeah. Regarding this execution, so is it anything related to CapEx, which is we are having some CapEx which is going to be online in the coming 2-3 quarters? So we may expect some speed up in the execution because after the CapEx is realized, or it is nothing related with the CapEx?
Okay. So let me tell you that we already are fully backward integrated for towers, conductors, and testing, and including our poles. So as the ramp up for brownfield is already happening, it is already helping us in our execution to meet the customer timelines. So we are well placed for completing our jobs on time, and the guidance given for this year's revenue is around 25% growth over previous year. So all this backward integration and brownfield project expansion is helping us in that.
And when it comes to the growth trajectory, so this year and next year we're expecting 25%. So going forward, maybe after that, maybe we need to achieve around 10,000 crores of revenue. So in the tender, how is the pipeline of the order, so whether it can support that much of revenue potential, how will this shape up? Could you please go from that on?
So what I could understand from your question, I'll try and answer. So we are today at 2.8 times of book and bill. So we are understanding our growth for next year and the following year, and we're looking at a 23-25% guidance of growth for revenue for next year from whatever we finished this year. So we have the order book to sustain, plus as I mentioned to you, we will be booking further orders in H2 to the tune of 3,000 to 5,000 crores to meet our need.
Okay, that's all from us. Thank you.
Thank you.
Thank you. A reminder to all the participants, please restrict yourselves to 2 questions. The next question comes from the line of Shubham from Tikri Investment. Please go ahead.
Good afternoon, sir. Thanks for providing me an opportunity. Sir, my question is related to gross margins. Sir, if we see, our steel prices have dropped by around 3,000 to 4,000 per metric ton, but we have not seen any increment in gross margins. So, sir, can you provide me the reason for that? And another question is regarding CapEx. We have seen our net PP grown by 65 CR on comparison with 31st March 25. So, what is the CapEx we have commissioned?
Yeah, so as I mentioned to you, first we'll answer the CapEx question. For our brownfield and new plant, against 325 crores, we have placed orders with 88%, and around 60% has already been paid off. That is already work in progress. That's why you see our net debt going up. Also, to answer your previous question, the steel is one item. So 30% of our execution is with towers, where there is a slight softening of steel price in the last 4-5 months. But we're looking at an annualized number. So what we are seeing is we are maintaining a 12% margin for H1. Of course, if you know, copper and zinc has already gone up. So those are other commodities which do impact. And also certain construction costs has gone up in the market because of demand and supply. So maintaining 12%, 11.98% margin profile is the best in the industry. If you see our peers, we are 4 to 5% ahead of them in terms of our margin profile, and we are maintaining that.
Okay. Thanks for answering the question, sir.
Thank you.
Thank you.
Next question comes from the line of Bala Subramaniam from Arihant Capital. Please go ahead.
Good afternoon, sir. Thank you so much for the opportunities. So, we need to understand about Africa and Bangladesh. I think in Africa, we are facing competition from 4 to 5 players per tender. And beyond multilateral funding, what specific competitive advantage we have, and what kind of strike rate and margins we have against well-funded Chinese and established local players. And in Bangladesh side, I think our order exposure is coming down 15% to nearly 6%. And we are not bidding. We are also not doing any new bids. And what are the strategic shift away from this country? And is there any systemic issues like payment delays and any temporary pause of our awarding orders? And thirdly, on the solar EPC side, it's our new focus, but we are bidding only internationally. We are not focusing on domestic side. And what is the competitive intensities, especially international markets? It's got very thin margins.
Okay. So let me answer your first question, which was on the Africa market. Now, Africa, we are working in 15 countries and we work mostly with multilateral funding agencies. We basically depend on our design engineering strength as Transrail, which helps us to look at waste volumes and be competitive in our bidding. So we are actually doing a good number of jobs, 19 odd jobs in Africa, and which gives us the position of strength in Africa. Coming to Bangladesh, we are focusing on executing the jobs as I mentioned in my first opening speech. We are doing well, execution is on time, and by the end of this year, 5% of our order book will be in Bangladesh, which we intend to finish by June, July of next year. So, and we are not bidding for any new jobs as of now. But we will look at it post next year once we finish this job. The third question is on solar EPC. We have picked up one job which we're going to start executing. Our strategy is to look at international jobs because we believe that EPC, along with our current portfolio of transmission, underground cabling, solar EPC is akin. We can have some basket products and the clients being same, we have opportunities to look at reasonable margins and to execute there. Principally, we don't want to work in India because we are still looking at opportunities in international, particularly Africa and Caribbean.
Okay, sir. Sir, working capital days have been increased to 91 days in H1 compared to 74 days in FY25. And is there any temporary dip related to project phasing or is there is structural issues? And what kind of working capital days we expect end of this financial year?
So working capital days, in fact, has been reduced. If we see the gross number of days, it was 91. It has gone down to 84. Excluding IPO, it has increased a little, 3 days only. It is because of we have accumulated inventory to take the advantage of the low steel prices, and that has become the major reason for the increasing this working capital days.
Okay, sir. Thank you.
So, yeah, okay.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question comes from the line of Anshul Jeti from LKP Securities Limited. Please go ahead.
Hello, sir. First of all, congratulations on a good set of numbers. So we posted some strong execution in Q1. Now we have posted good numbers for Q2 as well, but the execution is mildly less comparative to what we did in Q1. So can we expect this momentum to continue for the rest of the year as well?
No, actually Q2 is monsoon-led. We had extensive monsoon this year for 2.5 months plus, and most of our projects got, affected by that. So principally, we see that catch-up happening in next quarter, Q3 and Q4 without a problem. But the projects have to be executed and on a timely basis, so the revenue catch-up will happen automatically.
Okay, sir. On my next question, it's regarding just bookkeeping question. I have seen a tremendous increase in your trade receivables. So can we presume that there has been aggressive revenue booking towards the end of the quarter? And if yes, so is there any conversion of those trade receivables into cash ongoing in October and till now?
Yeah, we have got substantial cash collection during the month of October and November, and out of some suppliers some customers whom we have supplied the material and delivered the services during the month of September.
Okay. And so just one last question. What is our exposure from Bangladesh in terms of revenue as well as executed order book towards the end of Q2?
Our total exposure will be around 1,500 odd crores from a starting point of 4,500, and we will finish another 900 odd by end of this year, and whatever will be left will be done by June, July.
So what's our total receivable from Bangladesh as of Q2, sir?
It's I think in the range of 400 plus crores, but we got substantial money in October. Almost 300 plus crores we got.
Okay, sir. I'll get in queue if I have any more questions. Thank you.
Use the code today. Thank you.
Yeah.
Thank you. A reminder to all the participants, please restrict yourselves to 2 questions. The next question comes from the line of Nikhil from Kizuna Wealth. Please go ahead.
Yeah. Thank you for the opportunity. Congratulations on a good set of numbers. Sir, I have a certain bookkeeping questions. Like our contract asset, which contains our unbilled revenues and retention money, that has grown faster compared to our revenue from operations. And we are unable to make cash flows. Even in the first quarter, we have not made the first H1. We are not able to make the cash flows from operations. So how are we looking into it?
Sir, if you observe the contract asset vis-a-vis March 25, our total increase has taken place by 156 crore, whereas this mainly includes the TOC retention and the final retention. So TOC and final retention increase has been around 250 crore. So other IS, unbilled revenue, etc. assets have been reduced by 100 crore. So TOC retention is very much can be seen by the high turnover which has taken place during these last 1.5 years. So that is the reason behind the increase of the contract asset.
And this is something which will come down as the project close, the retention money will come back.
Yes, sir. And about the cash flows, so how are we going to generate more cash flow from operations?
So our cash flow, as we mentioned to you, net working capital days is 8. The teams are looking at faster collection. We have a very clear agenda to expedite that. And we also have old project closures and retention money coming back. So we are not worried about the cash flow. We have abundant funds on the table.
So, the retention money, that is actually the 5% of the project that is kept aside. So apart from that, we have receiving all the cash flows.
And if there are, let's say, 20 projects, these are all accumulated, which will come in the Q3 and Q4.
Okay, so that's great to hear. But I've been going through your annual report. We have given a report to related party Burberry company. So that has been given in like 22 or FY 23, and there has been no repayment of that loan. So can you highlight certain pointers on what basis that loan was given and how are we going to get that back?
So there has been...
There is a clear collection plan. The loan has been given. So for a period ending on September 26, so we are expecting that to collect by September 26. If required, then means that can be divided into 2 parts, and partly we will collect in 26 and partly we will collect in 27.
And so money came in last year also?
Yeah, money also came in last year, March. Part of the money was recovered during the last year. And we are having interest as well on the same, which is very attractive compared to...
30 crores was returned in March, and then we will have the next tranche coming in Q3. By March... Yeah.
Sorry to interrupt, Mr. Nikhil, but there are several other participants waiting for their turn.
Yeah, but sir is answering the question right now.
Yeah, so I just mentioned to you, 30 crores came in last March. The next tranche will happen now by Q4, and we are in a comfort zone, plus we are earning interest on this.
Okay, sir. Thank you. I will get back in the queue.
Yeah.
The next question comes from the line of Daksh Malhotra from Adriv Global. Please go ahead.
Yeah, good afternoon, and congratulations on a decent set of numbers. But my question is also in sync with the previous participant, that the cash flow from operations, the overall receivables as well as payables seem to be extremely high. They are, if I just check the data, they seem to be in tune of almost 50% of our annual revenue on both the ends. Just wanted some clarity, or if you guys can explain it, it will be very helpful. Thanks.
Basically, this is a high working capital intensive industry. So growth when it takes place, so revenue comparative to receivables and contract assets cannot be compared. If we see in isolation, then receivables are also getting received. There is no bad debts or provision for doubtful debts has been created. ECL liabilities have already been created by 40 crores, and in contract assets, all unbilled and TOC retention will be recovered once the projects are going to get completed.
Sir, but your trade payables are in September quarter almost touching 2,500 crores, which is, considering we have done about 6,000 crores odd of revenue in the first 6 months, closer to 45%.
It is basically includes the bills of acceptance, which are to the extent of, and if you see that 31st March and right now, it is on the same level. The increase is around 100 crore, not more than that. So during the last 6 months, we have increase of 100 crore in trade payables.
Yes, understood. The increase is not much, but was just trying to figure, are vendors comfortable giving such high, such long payable days, or just not being able to wrap my head around it?
In this business, normally procurement is taken place through the instrument of letter of credit. So to match the receivable cycle, we normally give the letter of credit for 6 months. So vendors are a bit secured to a greater extent, and that money is realized by them getting discounted against the letter of credit. So this is the bills of acceptances, which is higher.
Okay, understood. And even when we supply material, we do it against letter of credit because our receivables are also
credit. And our profile of customers in India are all top-notch marquee customers, and they pay us within 30 to 45 days.
Understood. Thank you very much. Yes.
Yeah.
Thank you.
Thank you. The next question comes from the line of Shubhankar Gupta from Equitree Capital. Please go ahead.
Hi. Congratulations on the good set of numbers. I have 2 questions. First is around the resignation of Ms. Vita Dani with effect from 10th November, which probably has something to do with Asiana Fund also reducing stake. So, sir, my question is, can you throw some more light on this?
Yeah. So, principally, she had come in on our board through Asiana Fund when they had invested, and there was no corporate compulsion for them to continue. And that's a normal process of joining. She's been on a board for 2 years, and then she's chosen to exit, and that's part of the normal corporate process.
Okay, sir. And second question is around some financials bit. So there was an unsecured loan of around 80 crores to Burberry Infra, and then probably some interest receivable. I'm not sure on the interest receivable bit. But my only question is, have we gotten that loan back, and what's the update on that? That's right.
Just now, as the MD stated during the previous question, we have already received 30 crore during the last financial year, and part of the amount will be received in Q4 this financial year, and balance will come by the next, thereafter 26-27.
Okay, so 20 crores by end of this year, 30 already received, and then remaining by next year. Right?
Yeah. And interest also charged at the rate of 12%, which is higher than the borrowing cost of the company.
Got it. Okay, sir. Sir, any light on why Chana Fund is reducing stake? Anything we are aware about?
No, but that's a corporate investor who chose to come in for X period of time, and that's their call, and we don't have any issue.
Got it. All right, sir. Got it. Thank you.
Thank you. The next question comes from the line of Raj Saraf from Finvestor. Please go ahead.
So I hope I'm audible.
Yes, sir, you are audible.
Yeah. So the momentum on which we have executed our orders in H1, that is phenomenal. So given the fact that the H2 is always stronger than H1, and the past trend has been for all the T&D companies. So now we are guiding for 25% revenue growth for this year. So how to look at the entire picture for especially this year?
So you are hoping that we do more than 25, or 25 is good enough?
So just seeing the momentum of close to 50% in the H1 only. So how could be the H2? Did we have any? Do we have any growth for H2 or?
No, we are end up at annualized growth of 25. And when we make the budget for the year, we factor in what will happen in H1, what will happen in H2, and our effort is to do fast track execution, and that's why our first H1 is on dot in terms of what we planned, and it's happened. And H2 also should happen. In fact, if there is any upside on 25%, that will happen by March, but we are pretty comfortable they'll meet the 25% guidance.
Okay. So 25% guidance will be there. So like you said that what we have planned, we have done in the H1. So that means I can consider that H2 will be somehow not at this pace as we done in the H1.
And see everything, there are multiple projects we are running, different stages of execution, different stages of engineering. So it is a very constructive, focused plan when you know what will happen at what point of time. So whether it's ground reality or engineering approvals, all that taken into account, we are giving a guidance of 23-25%, and we hope to better it.
Okay. And sir, how to read about the margin percentage? So it is going like even comparing to last year, the margin is slightly, I think, 100 bits down on the EBITDA margin percentage, and
you have to
even on the PAT levels.
The way the margin today is at 11.98%, I have given a guidance in the beginning of the year of 11.5 to 12. So based on the guidance and the product mix and the project mix and the geographical mix, we believe that we will maintain 11.5 to 12% for this financial year. Now all this is a process of project by project understanding and how we are executing, and I think this is the best in the industry. We are ahead of our competitors by 3 to 5%, and therefore the margin profile is good.
Okay. Thank you, sir. Thank you very much, and best of luck for future.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question comes from the line of Arun from Special Invest. Please go ahead. Mr. Arun, kindly unmute yourself and proceed with your question. As there is no response from Mr. Arun, we are moving on to the next participant. The next question comes from the line of Avantika, an individual investor. Please go ahead.
Answered this question partly in your previous, but I just wanted to clarify. You mentioned that your full year guidance is 25%, and in the first half you've already done 61%. So at 20 to 25%, there's basically zero growth in H2 for the full year?
Not at all. The H2 numbers are much steeper, and what you're comparing is to the last year. But if you see the growth of 5,300, last year we finished at 25%. H2 also has a huge project execution to be done. So if you look at the maths, we will be overall on 25%, and that's the number you should see. And of course, H2 also will grow going forward.
So if we are doing 25% for the full year for FY26, we've already achieved 60% growth in H1, which by and large kind of covers even the H2 growth if we are still hitting only 25% for the full year in FY26.
I had mentioned a caveat that we may better it also. So first quarter and second quarter of last year was a slow start for us because of engineering design approvals. Now we are in an execution phase. So therefore the growth looks big versus last year, but it is part of our business plan and we will continue for achieving the numbers we have promised.
Understood. Thanks.
Thank you.
Thank you. The next question comes from the line of Anusha from Phillip Capital. Please go ahead.
Hi, sir. A couple of quick questions. So we have, done 1561 crores of, revenues in September in this quarter. So I just wanted to understand how much is the domestic percentage of revenues and how much would be the exports?
So our exports will be around, international will be 50%, domestic 47%.
Domestic would be 47, right?
Yeah.
Okay. And what could be the percentage of power T&D in this?
Power T&D is almost 90%.
90%. Okay. And sir, as you had mentioned that we are targeting a growth of 25% for the overall year, and we've already achieved nearly 50% of in the first half itself. So are we planning to revise that guidance, which is considering that typically H2 is likely to be a stronger quarter in general for the power T&D companies in terms of execution capability? So are we planning to revise any such sort, because we've already achieved 50% of the projected revenue?
So as I mentioned, you heard on the call, different projects are in different stages of approval and engineering, design approvals and approvals for right of way. So there is no mantra that the H2 will be, more than H1. However, we agree that H2 will not have some of the impediments of H1, and we are looking at 25% guidance. And if we can do better, definitely it will be above 25%.
Okay. Just the last question from my end, sir. So in the last, in Q1, in the end of Q1, in the presentation, the commissioning of the brownfield plant was, expected to be done by Q2 FY26. So is there any sort of a delay? Because now, as I see, completion is now being pushed to Q3 of FY26. So is there any?
Yes, we already mentioned that brownfield is already started to get executed. It's already happening, and we will finish it. There is a month delay because of the fact that heavy monsoons and flooding. So there was a delay of that. Otherwise, we are on schedule, and the benefits of getting the incremental production for both our plants for towers already started happening. And we've shown it in our investors presentation about work happening in the various plants.
Okay, that's...
We are on schedule. There is a, let's say, 10-15% residual which will happen now between October and November.
Okay, that's it from my end. Thank you so much. All the best for the remaining quarters, sir.
Thank you. The next question comes from the line of Janam Doshi from Chris PMS. Please go ahead.
Yes, sir. Congratulations on a good set of numbers. So, of the total order intake which we are expecting for the entire year, how much are we expecting it from the international markets?
So, international, we are looking at approximately out of 10,000 odd crores of fresh order intake. We are looking at approximately 40% to 45%. So, around 4,000 odd crores from international.
Okay, got it. And PGCIL has been facing some delays in commissioning its capex plans. So does it impact us in the order intake or something kind of it?
No, not at all. We are already having multiple projects with Power Grid, and we are finding that they are giving the contracts on time. So there is no issue. and they are actually upping their capex requirements and looking at more orders being given to the market for execution.
And with respect to the contract assets, we expect a subscription in Q3, Q4 going ahead?
Yes, there are some.
By what amount, like percentage or amount would help us?
We cannot quantify the percentage or amount, but we are expecting to reduce it by way of realizing more of retention and getting the unbilled converted to the billing amount.
Okay. Got it. That's it from my end.
Thank you. The next question comes from the line of Anmol Mittal from SMC Private Wealth. Please go ahead.
First of all, congratulations, sir, for great set of numbers. Sir, can you throw some light for revenue generation possible in the next quarter? And my second question is, in trade receivables, what is the split between domestic and international? And in that part also, what amount of trade receivable are hedged from letter of credit from funding agency?
Mr. Mittal, there is a background noise from your end.
Okay, no problem.
So we are looking at a strong execution happening in Q3 also. Post monsoons, we need to catch up on the Q2 numbers which got delayed because of severe monsoons and continued monsoons. So we'll see a healthy set of numbers in Q3 and Q4 in terms of execution revenue.
Okay, sir. And what about trade receivable? What is the split between domestic and international, and how much of that is secured from funding agency?
So, receivable remains.
1 minute, we're just checking.
660. Sure, sir.
Around 60% is from the international and rest is from domestic.
And sir, how much is secured from funding agency?
The international we are doing only with the multilateral funded or things are secured by LC. So 100% of the international is secured by multilateral funding or LC.
Okay, sir. Thank you.
Yeah, thank you.
Thank you. The next question comes from the line of Sahil Patani from Stokes Capital. Please go ahead.
Hi, thanks for the opportunity. I think most of my questions have been answered. Just wanted to understand, this is on the back of one of the previous participants' question. By when are we planning to turn kind of cash flow positive, and what is our strategy to achieving that?
So we are in company working a very highly intensive program of working capital management, and we are expecting that we will be in a position to reduce our NWC. NWC outstanding reduced and recovered substantially in the month of November, and expect that by March we will be in a very comfortable cash inflow position.
Okay, so our second half is...
Yeah, second half it will be December and March are the focus milestones.
Okay. And my second question is, sir, what is the traction, how is the traction you are seeing for railway projects and bullet train projects?
So railways is a small SBU for us, 4 to 5% of our revenue. We are very selective in bidding here based on the margin profile and the geography. So we intend to build a pre-qualification here. We don't want to go big in railways as of now. Our focus is T&D as of now.
Okay, got it. That's it from me. Thank you.
Thank you. The next question comes from the line of Raj Saraf from Fininvestor. Please go ahead.
So thank you for the follow-up question. So, sir, just excuse me for I'm bringing this question again, because already this has been asked by myself and also from one of the participants more. But sir, when you say that there has been some delay in execution in the monsoon season, and that will be spill over to the Q3, and we are already maintaining a run rate of around 1,500 to 1,600 crore. So, just by going this statement, that means that we will be doing much better in Q3 and Q4. But at the same time, and all three questions, there is a guidance of 25%. So actually, on this perspective, there is a confusion on how the H2 will pan out. And the second question is,
actually, the dilemma and the question you're putting us is very good. Everybody is expecting that we do better than our guidance, which we want to also do. And it's a good problem to have because our speed of execution is genuinely good versus a business plan. So we are hoping that we meet 25%, and if we can better it, as I mentioned, we definitely will strive, because please understand that all our jobs are with fixed time plans of 24 months or 30 months. And if we can do before time completion, the client will be very happy. And of course, we save money and make better margins. So therefore, our endeavor is to meet 25% guidance. And if we can do better, we are hoping for the best.
So are we not satisfied with what we have achieved in Q2, as you were mentioning that monsoon has delayed some projects?
Yeah, for sure. We'll catch up that and we maintain our Q3, Q4 project execution revenue.
Okay, sir. And as we are doing more very substantial export revenues, so are you envisaging any kind of risk doing these kind of executions?
So all our multilateral.
Yeah.
So let me explain to you that, see, when you're executing more than 50 projects at a time, some projects will be slow start, some will have some delays, some will be doing well. A mix of it is what you see in terms of revenue. So firstly, to answer your question, the overall international projects are secure with multilateral funding. And if there is a delay a month or two, we catch up in terms of revenue for the year. And this is project management, so there always will be some areas where you have not anticipated but have happened. So giving a 25% growth guidance and maintaining our margin profile is what we feel is very good. We are proud of that and we intend to achieve that.
So how we intend to just go forward with the ratio between export and import going forward? Because what we are seeing right now a very tremendous span in translation and distribution in our country also only.
Correct. So as we told you, 53-47 hai, but this will change and it will be more domestic than international next year.
Any ballpark numbers, sir, if you can guide us on next 2-3 years?
545 is what my expectation.
Yeah. Okay, thank you. Thank you for the follow-up question, sir. Thank you.
Yeah,
thank you. The next question comes from the line of Arun from Special Invest. Please go ahead.
Hi there, good evening. So I would like to understand the rationale behind the acquisition of the company announced CEDC Engineering Private Limited.
Today. That's what.
Can you explain the rationale?
That's what you mean? Today?
Yes, sir. Yeah.
So principally, this is a SPV. We are looking at growing our business in civil for bridges and hydros. This is SPV we have created. The investment is very minimal of 50 lakhs, where we want to house this business and see how to grow it.
Understood. So, considering the tailwinds for the T&D industry right now, so any industries might will it affect the bandwidth of the management?
Mr. Arun, we cannot hear you clearly. There is a lot of crack in your voice.
Right now, is it audible?
Yeah,
You
better.
are audible. But the thing is, whenever you are asking the question, there is a lot of crack.
So, considering the huge tailwinds for the T&D business right now, will it affect the bandwidth of the management focusing on adjacent civil and the hydro business?
Come again. Repeat this question.
Considering the tailwinds for the T&D business, will the focus on hydro business and civil business be a lag on the...
So I get your question. Look, we mentioned we will be 90%, 88 to 90% T&D. Our focus is not going anywhere. We are building up pre-qualification and looking at opportunities because the infra sector also is growing and bridges and hydro is a sector where this competition is less. So we are only growing our pre-qualifications and being future ready. Our focus remains 90% in T&D and that's our company's strength.
Understood, sir. Thank you.
Welcome.
Thank you. The next question comes from the line of Avinash from LKP Securities Limited. Please go ahead.
Hello. Yeah, sir. Thank you for the opportunity.
You are audible?
Yeah. So, yes, sir. So, thank you for the opportunity. Just wanted to know how much is the bid pipeline. So, as you told that in the overall your targets are like 9,000 to 10,000 crores of worth of order inflow. So, overall, what is the tender pipeline or overall pipeline for you?
Okay. So, in H1, we have quoted jobs worth 40,000 crores. Okay. And in H2, we're looking at another 55,000 crores to be bid.
Okay, so around about 90,000
crores. 95,000 crores of bid pipeline we have, which we are addressing, and that's the focus we are going ahead with.
And what is our strike rate on all these? Like, how much is like?
10%. So if I am 10,000, you will understand that it is 9 to 10%.
Okay. And so my next question is, you mentioned that you have entered into 3 other countries. So if you could tell us which all countries you have entered and what kind of order inflows you have got from there.
We entered 3 new countries, principally Ethiopia, Djibouti, and Botswana. 3 new countries we entered.
Okay. And are we seeing any traction in the Middle East side also, where there is a lot of opportunity what we get to hear from other companies?
In Oman, we are bidding in Qatar. We are also bidding in Jordan. We are also bidding in Abu Dhabi. So we are looking at some opportunities in the GCC.
Okay. Okay, sir. Okay. Thank you for that. Thank you.
Thank you. The next question comes from the line of Nikhil from Kizuna Wealth. Please go ahead.
Yeah, so thank you for giving me the opportunity. Sir, I'm also looking at, when I look at your annual report, I'm also seeing that contingent liability claim against company not acknowledged debt of 67 crores. Can you explain what is that?
So the legal case, or what are you talking about?
Sir, in our contingent liability, in our annual reports.
There are various disputes which are challenged before the courts and various forums related to the taxation matters and others.
So this is pretty much in routine course of business. There is nothing to be worried or alarmed about.
Okay, sir. Thank you, sir. That's it from my side. Thank you very much and all the very best.
Yeah, thank you.
Thank you. The next question comes from the line of Jay Neil from Prudent Corporate Advisory. Please go ahead.
Hello, am I audible?
Yes, you are.
Yeah, I had to ask about the project cost, which includes raw material and subcontractor fees. It has been hovering around 67 to 65% over last 2-3 years. But if we look at the half one numbers, it came at around 68% of revenue. So because of higher subcontractor fees, I guess. you expect it to move close to 67 to 66% along with historical average, or do you expect it to stay elevated?
It actually depends upon the project which we are executing. Some of the projects, they are at the stage of finishing and final working. There is going to be more of the subcontractor cost and less of the material cost. So quarter to quarter and half yearly, it will be depending upon the project, the milestone of the project which we are going to achieve.
So in nutshell, this will normalize to 65-66%. So what is coming to a closure will get closed and billed.
Okay, so in terms of FY26 and 27, it will stay close to 66% only.
Yeah, and hopefully by March we should be trying to achieve that.
Okay. No questions.
Thank you.
Thank you. The next question comes from the line of Nikunj Bhanushali from Kosh Wealth Management. Please go ahead.
Hi, sir. Congratulations for a good set of numbers. So I just have one question, is that what are the major contributors of our order book right now? Maybe you could tell me about the top 3 or top 5 orders.
So we have order book from Power Grid. Out of these L1s, around 2,000 odd crores out of 2,600 is Power Grid. Then we have Reliance, we have DRH. They are private players who are giving. So all the top orders are from marquee clients, including international. As I mentioned earlier in the call, Kenya is a big order. So we are working with top-notch multilateral funding agencies and marquee clients in India.
Okay. And what is the timeline for the execution of our current order book?
Domestic is up to 24 months and international is 24 to 30 months. Actually, international also is now 24 months in some cases.
Okay. All right. Thank you.
Thank you.
Thank you. Ladies and gentlemen, we will take that as the last question for today. I would now like to hand the conference over to Rishabh for closing comments.
So I will take the closing comments. Firstly, I like to thank everybody on the call, and I like to make 2 statements. One is we are a professionally managed organization guided by a strong and experienced team and diverse independent board. So we ensure that there is a lot of robust governance and strategic oversight. Our success is built on continuous investment on our people, on training and development. And what we are doing today is all our strategic initiatives and our 3-year horizon, we are very clear how we are going, and we want to ensure everybody that Transrail is in a strong position to actually look at a diversified portfolio, and leading to our guidance, we will achieve our numbers going forward. With this, we'd like to thank everybody, and we close the call.
On behalf of Transrail Lightning Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.